Hello bulls, hello bears, welcome to another episode of Stock Rumors. Would you like to get rich quick? Well, I would like to get rich quick, but I don't know how to. If you know a way, let me know in the comments below, because I'm just a guy who trades stocks, collects dividends, and make YouTube videos. Speaking of which, if you haven't subscribed to my channel yet, go ahead and do that. Today, I want to share a strategy for stocks that pay dividends. But before I share this strategy, I want to explain what is Ex Dividend date. A way to remember what is Ex Dividend date is to think of an ex-husband or an ex-wife. Ex Dividend date is the date on which the divorce takes effect. You are divorcing yourself from the dividends. The dividends are your ex. So if you buy a stock on that date, you will not have the rights to collect dividends for that quarter. Let's say that you want to buy a stock that pays dividends, and let's use for example AT&T. All you have to do is search AT&T Ex Dividend date, and you can go to a website like this and find out when is the Ex Dividend date. As you can see here, January 9th is the Ex Dividend date for AT&T. Ex Dividend date is the date that you must remember if you want to collect the dividends for the current quarter. Can you buy AT&T on January 9th and still collect the dividends? Of course not, because on Ex Dividend date, you have already divorced the dividends. You don't have the rights to collect dividends for that quarter. You must own the stock the day before, January 8th, in order for you to collect the dividends for the current quarter. What if I buy the stock January 8th at 3:59 in the afternoon? Will I collect the dividends the next month? Of course, because I would own the stock the day before the divorce takes effect. Was that simple enough? Did you understand? If you didn't understand, don't buy stocks, please. If you are a swing trader like I am, I will share a strategy with you so that you can have it in your toolbox. I look for stocks that are in an uptrend. Remember, the trend is your friend. Now, this is not financial advice. You should consult your own financial advisor. But me personally, I love to buy stocks right before Ex Dividend date, even the day before. And since I'm buying a stock in an uptrend, I know that the stock price has been going up. I will be able to collect the dividends and then I will sell the stock right after. Remember, on Ex Dividend date, the stock and the dividends divorced. So you keep the rights to collect the dividends and you sell the stock without the dividends. But it is not as simple as buying the day before and selling on Ex Dividend date. Because on Ex Dividend date, the stock price will open lower than the day before. Using AT&T as an example one more time. If the day before AT&T closed at $39 on Ex Dividend date, the price will open 52 cents lower than the day before. They will deduct the same amount they're paying in dividends from the stock price. If they are paying 52 cents in dividends on Ex Dividend dates, the price will open 52 cents lower than the day before. So if you buy a stock the day before and you sell right away on Ex Dividend date, basically you will break even. You will collect the 52 cents in dividends, but since the price is opening 52 cents lower, basically you break even. But with my strategy, I'm buying stocks that are in an uptrend. I collect the dividends, and even though the price goes down on Ex Dividend date, I know that since the stock is in an uptrend, later on the price will go up again and I will be able to sell the stock. Remember, there are risks in every investment that you make. No strategy is perfect, but this strategy has worked for me every single time. I buy valuable stocks. I buy stocks that are in an uptrend. I collect the dividends by buying the stock right before Ex Dividend date. The stock price goes down on Ex Dividend date. I hold them for a little bit because I know the stock has been in an uptrend. Later on, the price goes back up and I sell the stock. But if you are a position trader, if you are a long-term investor that is building his portfolio, I also have a strategy for you. So if you are looking to build your portfolio, remember that on Ex Dividend dates, the price will open lower than the day before. So you could buy the shares at a discount on Ex Dividend dates. If you buy the shares on Ex Dividend dates, you will not collect the dividends for the current quarter. But since you are a position trader, you are a long-term investor building your portfolio, you will buy the shares on Ex Dividend date at a discount and keep them for the long term. In the next quarter, then you will be able to collect the dividends. That's how you could build a dividends portfolio at a discount. Now you know what is Ex Dividend date. Now you know how to collect the dividends for the current quarter. And now you know how to build a dividends portfolio for the long term. I hope that you found good value in this video. And if you did, please reward me by hitting that like button. Don't forget to subscribe, and bulls and bears, I'll see you in the next one.